Good morning. I'm Andy Myers at Weiss Research, and this is your morning market update for Tuesday, August 2nd. Stocks on Wall Street seem to be headed for an 8th straight loss, as investors grow more concerned about the pace of the economic recovery. Those concerns are only growing more pronounced this morning after the latest data on consumer spending. It fell 0.2% in June, marking the first decline in nearly 2 years. Meanwhile, personal income rose slightly, pushing the individual savings rate to 5.4%, its highest level this year. A closely watched inflation gauge within the report dipped 0.2%, likely reflecting a decline in oil prices. But excluding volatile food and energy costs, the so-called core PCE rose slightly, suggesting prices for many other consumer goods remain elevated. Consumer spending accounts for 2/3 of GDP, so the economy is unlikely to grow much faster unless spending picks up. Last week, first quarter GDP was revised sharply lower, and second quarter growth came in much slower than expected. Those concerns are overshadowing the likely resolution of the debt ceiling debate in Washington. Yesterday, the House of Representatives approved a deal that would raise the government's borrowing limit by $2.4 trillion and cut the federal deficit. President Obama is expected to sign the bill after the Senate passes it today, but analysts say it probably won't be enough to keep the rating agencies from downgrading U.S. debt. Concerns about the global economy continue to push traders toward assets perceived as relatively safe. That's pushing gold to a new all-time high of $1,640 an ounce. And in the currency markets, the Japanese yen and Swiss franc are gaining ground on the dollar, and especially the euro. Traders are fleeing the European currency and the government bonds of struggling Eurozone nations amid fears about the sovereign debt crisis. The cost of insuring Italian and Spanish debt against default is rising to a new record today. And despite the worries about a U.S. debt downgrade, investors continue to favor treasuries. Right now, the yield on the 10-year note is falling close to its lowest level since November. Meanwhile, oil prices are declining on the expectation that slowing economic growth may put a dent in demand. Light sweet crude is dipping back near $94 a barrel at the moment. Turning to corporate news, the world's biggest pharmaceutical company tops today's earnings calendar. Pfizer reported a 5% increase in second quarter profit, but its adjusted earnings and revenue slipped. The numbers were roughly in line with estimates, and Pfizer also reaffirmed its outlook for the full year. Right now, its shares are modestly lower. Another decliner today is Archer Daniels Midland, down more than 3%. The agricultural giant posted a 65% drop in quarterly profit, falling way short of Wall Street forecasts. ADM blamed the miss on higher corn prices and said corn and soybean supplies remain tight. But the biggest stock loser on the S&P 500 index is Metro PCS. The wireless provider is slumping 20% after its quarterly numbers miss consensus estimates. Finally, we do have one stock mover on the positive side. Hyatt Hotels is jumping more than 6% after it posted a 48% jump in second quarter net income, much better than analysts were expecting. That's the latest from Weiss Research. Have a great trading day.